Hi guys, this is Vishal Kapoor, your friend in real estate. And today I have with me Mark Levitt, life insurance advisor, and we're going to talk about mortgage insurance versus life insurance. Let's watch. Hey Mark.
Vishal, good to see you again.
Good to see you, man, and really excited to hear from you. And I know a few things about life insurance, mortgage insurance, but a lot of people have the confusion about that. So my first question to you is, what should I do? Like, if I go, should I do mortgage insurance or should I do life insurance?
That's a good question.
Right.
I really think that for your clients and your listeners, you really need to consider personalized life insurance. So you would ask me why. Am I biased because I'm in the industry? Well, of course, but there's some good reasons why.
Right.
So let's start with one. So for example, when you go and get mortgage insurance at the bank on your mortgage, you're paying for a coverage for the mortgage only.
Okay.
But your mortgage goes down in value over time as you pay it off.
Right.
If you have a personalized life insurance plan,
Right.
the value of that plan stays the same as long as the policy's in force. So on the one hand, with a mortgage insurance product,
Right.
you're paying for a declining balance in the product.
Right.
When you deal with a life insurance professional,
Right.
you're paying the same for the same coverage.
Right. Okay, so that's interesting because that's what I do, because that's coming out of my second question as well. When I'm doing any of those insurance, who's that's protecting to? When I'm doing the mortgage insurance, is protecting me or is more protecting the bank?
Well, I think a good question to ask yourself is, do I want to protect my family or do I want to protect the bank?
Right.
So what do I mean by that? When you have mortgage insurance at the bank, if you were to meet an untimely death,
Right.
your mortgage balance gets paid off.
Right.
Whether that balance is still at 300,000 or at 100,000, that's all that gets paid off. No money actually goes to your family. So your mortgage is paid off, which is very important.
Right.
But when you deal with an insurance professional, we'll look at all of your needs.
Right.
We'll look at, yes, we want to make sure your mortgage is protected, and that's very important.
Right.
But Vish, I want to make sure your family can maintain their lifestyle and stay in the house.
Fantastic.
We want to make sure that if you have younger children,
Right.
there's going to be money for them to go to higher education, whether college, university, whatever it may be down the road.
Right.
We want to look at all your needs on a very personalized basis and do a customized plan that will protect you. So if that insurance policy has to pay out,
Correct.
the money's going to go to the person you decide
Right.
in your family or whomever it may be. On the other side with the bank, your family doesn't see any money. The mortgage does get paid off,
Right.
but that's it.
Fantastic.
And that is important,
Right.
but it's not the whole picture.
Next question to you over here. In terms of premium, is that a huge difference between, so for example, if I do a 500,000 mortgage and the 500,000 I want to do the life insurance, do the premium differ on that or it stays the same?
For most people, Vish, it's
Right.
going to be less expensive to buy life insurance.
Oh, really?
Now, again, it always depends on your age and your health, whether or not you're a heavy smoker, and sometimes it may depend on the type of insurance. But
Right.
in general, if we do kind of an apples to apples comparison,
Right.
life insurance for most people is going to be less expensive than the mortgage insurance at the bank.
Oh, that's interesting because I'm paying less, I'm getting more coverage.
You're getting more coverage, you're getting personalized coverage, and you're getting your needs looked after on what's important to you.
Right. Well, that's a great benefit. And also I'm just looking at not only that benefit, but also I'm looking to what happens after that. So for example, untimely death or something happened, and now if I want to change the beneficiary, can I do on the mortgage insurance or I can do only in life insurance?
When it comes to a beneficiary, that's
Right.
the person that will receive the money from the life insurance policy.
Right.
On a mortgage insurance policy at the bank, you do not get to decide on the beneficiary. The beneficiary is the bank to pay off the mortgage.
Right.
When you have a personalized life insurance policy, you'll decide who the beneficiary is. Whether it's your spouse, whether it's a relative, if you have younger children, and want it to be left for them, then you can decide who would the trustee be until they become adults.
Right.
So it's your decision because it's your personalized policy.
So that's fantastic. Well, my next question to you is, you know how in life changes, and I have the different need now, and I want to make some changes in my policy. Can I do in mortgage insurance or in life insurance like that?
Well, in mortgage insurance, you don't have a lot of options. Really, you're just covering the mortgage at the bank. When you have a personalized life insurance plan, you do have a lot more options, and because your needs do change over time. Just like you might be in a starter home and then go to a family home and then maybe downsize to a smaller home. Well, in the early years when you're buying your first home, you're all about protecting your family and making sure there's a policy there to protect your children while they're young and protect your family. As we get older, we might think more about the future, whether that be final expenses, paying taxes, maybe leaving something for grandchildren or charity. So one of the options we have with many of the personal life insurance policies is the option to convert them to a permanent life insurance policy that will last the rest of your life. And it's a very simple process. Up to, in many cases, up to age 70 or 71, you have those options.
All right, that's another great answer. My other question was just popping in my head is we talking about changing the policy and everything. So let's take mortgage insurance, for example. My mortgage is about due, or I just change it into the new mortgage for the new house. Does that policy stay with that, or in the life insurance, if I change the plan, the premium stays the same? How that works?
When you have a mortgage insurance product at the bank, it's not portable. Okay. So in other words, I'm at bank number one, my term is up, and now bank number two can get me a better deal on my mortgage. Because things change over time.
That's right.
So if I have mortgage insurance, I'm applying all over again at the new bank. I can't take that policy with me. When you have a personalized insurance policy, that's your policy. It's not tied to a mortgage, it's not tied to a bank. It's only tied to the length of the contract you sign, and as long as you keep the policy in force, it's yours, whether you move, whether you change banks, whether you change addresses, it doesn't matter, it's your policy.
Well, that's great answers like you're giving, and also enlightening me on some of the things which I didn't know. I know if I have to do the life insurance, or I need to personalize according to me. So if they want to personalize and they want to reach out to you, where they can reach out to you?
Just pick up the phone and call me at 905-516-3879, or you can email me at mark.levitt@bell.net, mark.levitt@bell.net. And Vish, can I just leave one more thought for your listeners and your clients? We've been talking about life insurance, which is very important to protect your family. But what a lot of people don't always think about is, what happens if I get sick or injured and I'm unable to work?
Critical insurance.
And now the money's not coming in because I'm not able to work. So really, the other part of our business that's really important and to understand and to know about is to be able to protect your paycheck. Because most of us rely on that paycheck, and we need it every 2 weeks, every month, whenever it comes in, to support ourselves and our family and pay our mortgage. If you're sick or injured and can't work, your bills don't stop. You still have to pay your hydro bill, you still have to pay your mortgage. Well, there's a couple different products we have, and we can work with people in all walks of life to come up with a way to help them protect that paycheck. So even if they do, whether they're injured in a car accident or fall off a ladder putting up their Christmas lights, or they get sick with a disease and can't work, we can still be able to protect them financially so that they can still get by through that period. So I want to leave that message. That's a very important part of my practice and what I believe in as a professional. And I really think that it's not talked about enough in our industry. So if someone's interested, I really think that's something to just keep in mind as well.
Oh, nice, fantastic. That was a very valuable tip which you give. And if you did like this video, don't forget to share with friends and family, and do subscribe our YouTube channel and like us on Facebook. We'll really appreciate that. Again, this is Vishal Kapoor, your friend in real estate, with Mark Levitt, your insurance advisor. And thanks for watching. Bye for now.
Thank you.